Hi there, Tom Jeffries on YouTube's channel here for HowStreet.com. We're talking to Lou Paquette now, Mr. Paquette, editor of Emerging Growth Stocks newsletter here in Vancouver. Check out Lou and his team at emerginggrowthstocks.ca. So the Old Home Week, Lou in the Week in Review for 5 years. Good to see you, Lou.
Nice to see you in person, Tom.
It's good to see you. Here at the Trade Convention Center, a huge show going on. What's the mood out there? What are your subscribers asking you about?
The mood is pretty good. I would say it's up a little bit from the last conference in January because the markets had, let's face it, a heck of a, nobody said we'd have a V-shaped recovery, but you look at you look at the indexes and they're in a V shape. So we've had a real good move, so something like 40% for Toronto. So the mood is, I wouldn't call it upbeat, but cautiously optimistic.
To your readers around the world addicted to profits, they know that you always have a modicum of psychology on your trades. Let's move that into looking at the worldview. When you look at the United States right now, their situation, are you starting to get a little nervous about them because they're the big dog?
Definitely, yeah. Largest economy in the world.
Right.
I guess what we see is it's shifting to China.
Right.
In fact, in my most recent issue, the May issue, the featured company is a company doing property development in China.
No surprise.
Okay, it may be listed in the States right now on the NASDAQ, but it's a China situation. There's some other really smart guys, way smarter than me, that I follow, like Peter Schiff and others. They love China. So yes, America is the big dog in town and the big economy, and could that affect us? I guess so, since 70% of our exports go to the States, but I think it's just a matter of changing of the guard here.
When we say emerging growth stocks, we also talk about those new properties. You're always scouring the world for a good property that's just starting. What are some of the criteria you look for as an analyst before you talk about that to your readers?
For property or company or people,
the whole thing?
Well, in a prior life, in my previous career, I was in HR, human resources, and I hired a lot of people, and I got a lot of feedback. If somebody didn't work out, I found out the hard way, and so I learned through operant conditioning how to pick good people. I got pretty good at it, sizing up people. So that's what I look for. The property and the product and the assets and everything are sort of secondary. Tell me who's running the show, and then I'll tell you if I'm going to follow up and find out more about it.
Let's talk about those junior companies too. The credit crunch has affected everybody. Was it really tough for the juniors to raise money without, God forbid, throwing out millions of shares?
Yes, the answer in a word, absolutely. There was a near the bottom in March and in November kind of thing. It was impossible. You didn't even try to raise money. So there was a period where credit really tightened up. It has loosened up substantially. The stock prices have come up. I see a lot of companies I'm following have done and are doing private placements right now. So that's kind of back to normal.
Lou, by the way, for people that don't know, is originally from Ontario, around the Windsor area. So I have to ask you, because your family and everything else, what is your take on this GM mess?
Don't start me.
Well, start. Go ahead.
I have a lot of affinity for the automotive industry. Okay, during the summer I worked on the line at Chrysler.
There you go.
Okay, in my first career job after university, I did HR and safety at an auto parts company. So it's not like I dislike the auto industry, but I really dislike this whole bailout business. It's a bastardization of the free market enterprise system. It's rewarding bad behavior. It's taking from people who live within their means and giving to people who do not. I can go on and on here, Tom. No offense, but if they weren't willing to tighten their belts, why should you have to tighten your belt for them? I
know. Also, too, when you talk about this in your newsletter, emerging growth stocks, that kind of money, too, there's no oversight. Where is it going? It also brings me to the banks. Why should we bail out the banks who've been charging us up the for all these years for fees? Something stinks.
Something does stink, and we have had this wonderful recovery. We've had this big bounce in the markets. The credit has loosened up again. The economy's sort of back to normal, recovering, but there is going to be a price to pay down the road. Other people, really smart people like Mark Faber, are saying it's going to be hyperinflation. So that shoe is going to drop. I don't know exactly when, but we will see it fall. They can't just keep printing money by the tens and hundreds of billions to give away like this without some other negative impact, and we're going to see that.
Do you think this rally we've seen is basically a sucker rally like it was back in the 30s? We had a very big retracement back in the 30s, 40, 50%. Everybody's saying, oh, the worst is over, party time. What's your gut say?
A lot of the guys in the conference are saying that.
Yeah.
Just my gut reaction, looking at the charts, is no. I think we've seen, it feels like a bottom. I mean, we got really negative sentiment in November.
Right.
That what we've had is a W shape. We had a bounce off that, then we had another double bottom in March. Some charts, yes, made a new low. Some did not, and some bounced higher. And it feels like a Stan Weinstein stage 1 of a stock market. And if you don't know what that is, basically he describes the market as 4 stages. Right. Stage 1 being the bottom, stage 2 being the bull market, stage 3 the top, and stage 4 the bear market. And it just feels like we've been through that, and now we're at the beginning of a stage 1 and beginning of stage 2 actually.
Fascinating too when you read Richard Russell lately. He's saying he's, of course, the emeritus of Dow theory. He's saying he's even confused. So is it really tough for you as an analyst now to figure out the trend here? Because it seems like it's so choppy and trends are moving so quickly, Louis.
That's a really good question. It's something I have been grappling with. And in fact, in my last issue or two, like a lot of people, I've been saying, well, the market's moved up too high and look for a correction. And I've been wrong. The market just keeps moving forward. And what I've made clear to my readers is that the picks in this issue are bottom-up picks. Right. They're the companies, regardless of what the economy is doing, they're extraordinarily undervalued, or they have a special situation going on where I'm not picking it because of the macro situation. I'm picking it just because of the individual company. And I too, and seasonally, usually, stocks don't do as well from May to October as they do from October to May. So I'm looking for maybe a 12% retracement, a pull, 50% retracement of the gains we've had wouldn't be out of the question. And I'm not devoting as much money to stocks as I was earlier in the year.
Interesting. How about gold? I have to ask you, we're bouncing around 1,900. Are we ways to go higher, or are we going to drift here for a while?
Yeah, could easily drift here. We got in a really overbought situation as of last week, and the U.S. dollar was extremely oversold.
Yeah, sure.
And it could be that we're in a late seasonal decline coming up, whatever, but I don't see it going down very much, 900 at the most. Yeah. And then we're going to go back to this 1,030, and we're going to break it in either this year or early next, I believe. Right. And once you get a clear break over 1,030,
here we go.
Blast off. I think it's going to go to at least 1,300 in the first leg.
Lou Paquette from emerginggrowthstocks.ca, and visit Lou and his team. You can get a sample issue if you wish. Lou, it's always good to see you, my friend. Thanks for the time on Howe Street.
Great to see you, Tom.
Louis Paquette, Tom Jeffries at Howe Street. Thank you so much for tuning in here on YouTube. We'll see you again soon.
Comments made on Howe Street Video and HoweStreet.com are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HoweStreet.com. Howe Street Video is a production of Howe Street Media Incorporated.